All right. I know it's been about 2 weeks. Been extremely preoccupied with exams, school. Life's been busy, traveling a bunch. I'm gonna try and get back into these a bit more. So if there's anything in particular y'all would like to see, let me know. I guess today what I just want to go over is just like one trade that I really recall taking last week. This month obviously has been trending up a lot. We've been trading at all-time highs for the most part. Even though I've been trading for several years now, I don't have the most confidence and experience trading at all time highs. And so, my mentor and one of the people I look up to tremendously, Antonio, he's been doing amazing. And even though I'm not the kind of person that watches live trades anymore, I have been trying to pay attention to what he's doing just so that I can learn a bit more. But so, yeah, that being said, I've been a lot more particular about the setups that I'm taking when it comes to taking longs, just because uh, it's just, yeah, you can hit buy most days and you'll probably make money, but it doesn't sit right with me. And then just between school and everything, and not trading that much, I'm still up around, I think, around 30,000 in payouts this month that I've taken out. But yeah, I guess what I just really wanted to go over was one trade in particular. Like it's the normally like you have like this short-term memory of like trades that you took and like you can look at the chart and maybe it'll take you a second. This is one in particular that I remember from last week. So, um I guess what I can start out with is when it comes to charting, and I have some settings change on some things right now, so this is not normally how my charts look, but I'm not one of those people that spends a crazy amount of time charting. And the true backstory for why I got into charting after several years trading was because I was setting alerts on highs or lows or like 4 hour gaps or, unfilled gaps on my phone for take profits. When you were setting these alerts on TradingView, what would happen is like it would still leave the red line up, and I'd see oftentimes like price wicks it and then, rejects and so on. Then at that point, I was like, okay, it might be worth it to start charting lows and highs and then unfilled gaps. So just looking really quickly, like this black line was just the previous day high. And then if we hop on the 4 hour, you can see that this white line right here was a 4 hour gap that got filled by one tick. Or yeah. Um, and so just coming back into this again, we had that previous day high, which was swept. So oftentimes, like I'm sure y'all are familiar with session sweeps and different things like that. Um, this is like a really strong liquidity sweep. Granted, this is the Asian range. I know not a lot of people trade at this time of night. That's fine. I like trading anywhere around 4 hour candle opens, just because I like to watch the wicks play out. And then quickly jumping back over here. So if I have this was that same previous day high that we had over here. And you can see that when NQ swept it, we had a pretty big divergence. So that would have been right here. Um, I pretty much always only trade when there's an SMT present, just because it makes my stop loss placement very easy. So when I had seen that we had swept previous day high and we had a divergence, I was like, okay, you know what? I'm relatively bearish. We'd also swept our Asian high. The 4 hour candle had opened and had wicked up. Um, and what I always do is I trade the weaker pair. I know some people that only trade Nasdaq. I know some people that only trade ES, and they they stick to that one regardless of which pair the SMT is on. Again, I do this just because it makes my stop loss placement very easy. So at this point, what I did was I was trying to look for a short setup, and I remember it was like a very clean short setup. So, um, not sure what exactly that zone was, but so when we swept this previous day high, sorry, um, right here, we had this very clean shape inversion. right there. Um, and I hopped in short, put my stop loss at the protected high. I was like, okay, so if we are gonna sell off, like I wouldn't want ES to now take previous day high. So I had my stop loss up there, and chopped for a bit, and then we started selling off. Um, this was where the 4 hour candle opened up. So yeah, we started selling off, and this white line that I had charted was a unfilled 1 hour gap. So what I like to do is, even though I'm very conservative with my stop losses, like I don't play them aggressive like right here, I still try and minimize my risk. So that white line was an unfilled 1 hour gap, as you can see. So I was like, if we're gonna go higher, we probably would reject either here or here. And so when we got to that point, I know. So when we got to that white line, I was like, I'm gonna go break even. I went break even, and I was targeting this Asian session low. Um, it's why that in particular, is just because, like, when you see it enough times, you understand, like, this will oftentimes get swept. If you take one side and you get a nice sell off, like, this will oftentimes get swept. And I was already risk free at this point. Like, I had gone break even once we were down here, and then we had a nice sell off. This zone that I have charted is the lower 1 hour gap. So if we jump back onto the 1 hour, um, you can see this was that lower 1 hour gap. And we were pretty, like, I was like, okay, we're probably going to close under it and we're going to sell off down to here. Or, yeah, that Asian low. Like, you know what? Okay, I'm probably going to hold it. Now, what ended up happening was, before that 1 hour close, we had a really, really nice recovery. And the 1 hour ended up closing within or above. And so, I had given up part of my profits at this point, and I decided to close the trade. Um, or actually, when we had this wick, I double checked with NASDAQ and I realized, oh my God, I couldn't tell, like, if we had hit that 4 hour. And then I looked in closer. I was like, we hit that 4 hour. So I ended up closing, like, I don't know, somewhere around here. So whatever, this trade was like a 2.4. I don't know. I closed like somewhere around there. And then again, the rationale for that was, we were coming into London Open and we had just wicked the 4 hour. And obviously, we hadn't yet closed below this 1 hour. So I was like, okay, you know what? I'm going to be safe and close this trade. The other reason for closing this trade was, when I went and looked at NASDAQ, um, I noticed this. So this was taught to me as GP by Antonio. Some people know it as OTE, but this is a very, very, very useful zone that, um, when it comes to retracements, if price is going to continue in the way that it was originally, I want to see this get respected. So not only had we wicked a 4 hour now, but it was also OTE of this range. We were kind of respecting this 5 minute gap, coming into London Open. So I closed my trade. That's short from here. Now, as we're recovering, I was just like watching this before I was going to bed. Um, London Open was about 3 a.m. and I noticed that we had this really, really, really clean recovery right here. Um, in terms of, like, when you talk about V shapes, even here on the 5 minute. So I'm gonna go ahead and delete this 1 hour gap just so we can keep it simple. Like, this really, really clean V shape. But the issue for me is, I like my SMTs. Right? If there's no SMT, I'm not gonna take the trade. And at the same time, I was like, but this looks so good. I'd refuse to believe that we had this reversal without having an SMT. Because, again, it's just like, my philosophy is that that's like the true catalyst, the true trigger for when the real move happens. Second inducement, I'm gonna make a video on that. I know I will. But so at this point, like, we had recovered pretty hard, like from this low, like 586, like to up here, like, this is like 30-ish points. Like, I don't particularly want to take a trade with a 30-point stop, but I was like, I refuse to believe that there was an SMT. So I was like thinking, huh, maybe when London opens, like we're gonna come back down here, and then we'll have an SMT, like like so, and then I can get long, and price will go like that. But it's like, let me just check. So I dropped down to the 1 minute, and here's what I noticed. Uh, Here is what I noticed. We go here. mm, We had this. We had equal lows on ES. Nasdaq did not have equal lows. This is what constitutes an SMT for me. Um, Again, obviously, sometimes it's going to be clear. Sometimes like it'll be lower low, and then this one completely made a higher low. And I was looking at it, I was like, dang, this would have been such a nice entry, like right here. It's like, imagine if I had gotten like um this long like that stuff. Kind of missed it. Um, and this was like a pretty safe TP buys, but I think I could have missed on this 7-8 hour trade. But I was like, considering the fact that we just rejected off of a 4 hour, and this is one of the things that I think about is when it comes to gaps, is I respect the higher time frame one more. So like if we are rejecting off of a 4 hour bullish gap, a 5 minute bearish gap isn't going to concern me because I'm like the 4 hour one's more powerful. That's just kind of the way I think, and it's done me good for a while. So getting back, looking at it, and I'm like, okay, well, we're coming into London Open. We're probably going to get some nice volume, hopefully. Why don't I take a stab at long? So at this point, I was on the 5 minute, and I was like, um, obviously Nasdaq looked a bit scarier, uh, but I'm looking at this, and I was like, well, we just closed above all these bearish 5 minute gaps, so that would have been like right there. Sorry. We closed above these. This 5 minute gap we've already interacted with. So now, like, I was like, I feel like this is a pretty easy target, right? And again, this is not crazy. That was exactly a 1-to-1. But I was a bit scared about going break even too early on this trade because we hadn't interacted with this fair value gap. And I know some people when they trade IFVGs, like I don't know the guys on social media. I see them every now and then. They go like break even like as soon as the nearest lower highs hit, um, which is fine. Again, sometimes like I'll leave a trade like that ES short with my stop like above here, and even though it disrespected my initial entry, like I had confidence in that. But still, I was playing with profits and I didn't really want to lose too much. So I took this long when we closed above this. I had like my stop here. I was just gonna watch it. Sometimes it wicks down. Um, and once we got here, I went break even, closed the charts, went to sleep. Now, when we talk about drawn liquidities or like easy targets, like equal highs, equal lows are always going to be safe targets. So like a lot of people would have targeted this. But for me, my rationale for targeting beyond that was we were rejecting off of a 4 hour to probably push higher. We had already had this SMT off the previous day high for us to get short. So now my like thinking is if we're truly bullish, like I wouldn't want another bearish SMT, so we're probably going to take out this high. Could I have held it overnight? Yes. And I mean, I caught a 3 hour trade. 10R if I caught that 1 minute entry, whatever, that's fine. So that was a really clean evening for me that I remember, and these are like the only trades that I can remember taking this month. I feel like that OTU retracement, I've been seeing it work really well this month. But I for some reason just can't remember any of the trades that I've taken with it. So I will try and um do a live trading video like tomorrow, the day after, and then if there's any other topics people want to go over, I have a few ideas already planned. But just to show, I guess some people are going to be a bit curious about this. So I essentially use two indicators on a day-to-day basis. I got this one from JCap. It just marks out the Asian range and then the standard deviation levels off of it, as well as your midnight open and your weekly open. Um, these levels are like they're not something that I trade off of. I'm not like if I see a reaction off this line, I'm not shorting this when we wick this, but it's just levels that I have. This these standard deviation zones are actually really interesting. So if I hadn't closed it, I'm gonna go back to this to show you an example. I believe it was on the day that we had FOMC. Here. So when you have, or what essentially these indicate is like the further and further that you go away, the more likely it is that you're gonna have a reversal. Um, and I forget the statistical breakdown of each level, but like for me, on a day when we're so oversold within this, like if you're hitting like your -4 or whatever, like you're probably gonna get a reversal. And I know on ES we also on that day went past it, I believe. Um, if I can find it. So this is yeah. Like I mean, you know, we're way overextended. So this is not something. Again, I'm not taking trades off these levels. It just like kind of gives me a reference point. And what he actually does, or I remember when I saw him talking about it, was he sometimes will take a trade off a divergence of it. So like, let's see, for example, okay, this is right now, right? So we are past the third one on ES, and on Nasdaq we're not. So like if he found a short entry, like what he might do is he might like, get short here and put his stop up there. Um I don't know what he would target. But again, so I have that indicator. It just shows me the Asian range, which usually you don't want to be trading in this. Like, yeah, sometimes you can get a nice move. And I'm the people that know me do or know that I do trade overnight, but I like to wait for this range to be established and then for one side to get swept to the other. And last night I did catch shorts, besides the point. And then the only other indicator I have is the 4 hour candle. As you can see, 2 p.m. just opened up. So yeah, I mean, it is very possible that we could get some kind of sell off. The reason why I have this up is because for me, when it comes to my entries and the way I like to trade, I am a because I trade pretty much inversions, you could say I'm a reversals trader. Obviously, I try and do it within the trend. So I don't necessarily consider myself a reversal trader. But what I've found works best for me is like, when you watch these 4 hour candles, like if I'm on the lower time frame and I see like the wick get formed in like a clean V shape. So like let me try and give an example. So like if this is like this is horrible. Okay, if this was like the 1 minute, right? Um and we like inverse this gap, right? Then I'm getting short right here. And the 4 hour candle like opened right here. And so like I see on this 4 hour candle indicator that we have a wick. So my 4 hour candle now looks like, you know, this is what my 4 hour candle would look like on the right. It would look like this. And then I have this, big black line coming out of it. And then, especially if you had like some chop, like, okay, there has to be a better. Sorry, I'm not used to doing this. Maybe it's the, it's like, yeah. Like if you'd had like a really choppy move up, oh, okay, whatever. And I'd be like, okay, that should be like a pretty easy target down there. And I just like seeing this for reference. Um, on the side, uh, it gives me some confidence. Like I never am gonna be in a trade shorting if there's no wick on the 4 hour. Um, ever, ever. Um, unless I was short and I'm holding a move down. Like I had been short on like this 4 hour candle and I'm holding like here. Um, but yeah, so those are the only two indicators that I use. And I guess that's all. I'm gonna try and pump out some other videos pretty soon. But yeah.